As of May 7, 2025, Federal Reserve Chair Jerome Powell has concluded his press conference following the Federal Open Market Committee meeting. The Fed decided to maintain the federal funds rate at 4.25% to 4.5% for the third consecutive time. Key takeaways from Powell's remarks. Interest rates held steady. The Fed opted to keep interest rates unchanged, citing increased risks of higher unemployment and inflation. Powell stated that the current monetary policy stance positions the Fed well to respond to potential economic developments. Impact of tariffs. Powell acknowledged that the recently announced tariffs were significantly larger than anticipated, potentially leading to higher inflation and slower economic growth. He noted that the full effects of these trade policies have yet to materialize, warranting a wait-and-see approach. Economic indicators. Despite a contraction in GDP by 0.3% in the first quarter, the labor market showed resilience with 177,000 jobs added in April. Inflation indicators remained relatively stable, with the Personal Consumption Expenditures Price Index unchanged in March after a 0.4% rise in February. Political pressures. President Trump has been vocal in urging the Fed to cut interest rates, arguing that the tariffs would not lead to inflation. However, Powell reiterated the Fed's commitment to data-driven decisions, maintaining independence from political influences. Future outlook. The Fed signaled openness to adjusting monetary policy as appropriate, depending on incoming data and evolving economic conditions. While no immediate rate cuts were announced, the possibility remains if economic indicators suggest a need for stimulus.